The IPO market, if you haven't been paying attention, has slowly been making a comeback in 2025. And our next guest works with late-stage companies on ways for their employees and their shareholders to sell their stock and for investors to actually access some of those private shares. Nasdaq Private Credit CEO Tom Callahan joins us now on set with the story. Tom, is it too far-fetched to say that private markets will come close to liquidity, the likes of which the public markets have right now?
Well, Dom, thanks for having me. And I would actually predict that in the next 3 to 5 years, the private markets could exceed, at least by one metric. So what we do at Nasdaq Private Market, as you said, are private company tenders. That's where private companies, and there's a meta trend that we need to kind of talk about here. I think everyone knows 25 years ago, there were over 8,000 publicly traded companies. Now there's half that. A decade ago, there were about 50 unicorns, private companies worth over $1 billion. Today, there's close to 1,200. So the public markets are shrinking and the private markets are growing. And so, for a private company, what that means, if you want to attract and retain the best talent, and remember, a lot of these big private companies are competing against the Metas and the Googles. They need to offer employees liquidity on their shares. The average company now waits close to 15 years before they IPO. Pretty tough to say to that 25-year-old software engineer you just hired, wait till you're 40 to buy your first house. So they do tenders in order to offer liquidity to their employees.
What's been the evolution like just in the past 5 or 7 years? It's gotten huge, but you've watched it develop over the course of the past 20 or 30 years. What has been causing the massive ramp up in just like the last 5 or 7 years?
Well, let me give you some numbers on the tender business, and these are our numbers. So 3 years ago, we did about $3.5 billion in tender volume. Last year, we did about $6.5 billion in tender volume. This year, 2025, we're going to do about $30 billion in tender volume. So the market is just absolutely exploding. And I think it's a byproduct of the trend I just talked about. More private companies being more valuable. Most valuable private company right now is OpenAI, $500 billion company. That's bigger than ExxonMobil. Second largest one is SpaceX, $400 billion valuation. That's bigger than Bank of America. Third, Anthropic, $180 billion valuation. That's bigger than Citibank. These private companies are getting absolutely huge, and they have to manage their employees' liquidity. The same way that public companies offer employees shares that then, vest and they're able to sell them to live their lives. Private companies need to do the exact same thing.
Tom, it's a perfect time to have you on because the secondary market's probably as hot as it's ever been. But investors that are watching, transparency, how do they get involved? Some of the risk. I know that's sort of open-ended, but speak to that.
Yeah, Guy, I'm so glad you asked that question because really big things are happening right now. President Trump just signed his executive order allowing private funds into retirement accounts. So we have tens of millions of nurses and cops and firemen that are going to be literally betting their retirements on private funds. And so you have that dynamic. The private markets are being opened up. This is an asset class that historically has been for Sand Hill Road, the most sophisticated institutional investors. Now we're letting essentially retail into these markets. So you have to know what questions to ask. And, who doesn't want to own SpaceX? Who doesn't want to own OpenAI? Who doesn't want to own Anduril? These are the hottest, most dynamic companies in the market. One thing that I always explain to people that are new to the private markets is they're different from public markets in a lot of ways, but one really important way. Public markets are bilateral. You need a buyer and seller to agree on terms, and you have a trade. If you want to buy a share of Apple, Guy, you don't need to ask Tim Cook's permission. In the private markets, you do. The company needs to approve every single share transfer. That extra step, what we say the private markets are trilateral, adds enormous complication. And a lot of the biggest and best and most dynamic private companies don't want little folks like us as investors. They only want large institutional players. So they're literally not accessible to the average retail investors. And a lot of retail investors are very surprised to learn that fact.